This is the Aussie dollar for the week of the 11th. As you see, we're long the Aussie since 88.58. We have been taking it all the way long from March, and the last entry was on the long side was 88.58. We had a week close on Friday, which also confirms that we're having some buying coming into the dollar and long liquidation in the other currencies. So, but we still have no sell signal into the Aussie yen because the Thursday was a big range day, and that is a normal reaction on Friday. Even though with all this the buying power that came into the dollar, we had a small decline in the that range of the day is about 60 pips, which is a very small range day. So looking at our daily on the Australian, what we have done, we have tested the 91 handle, which was one of our prior points over here. This is the 91 handle right there, and this is where we tested it today, and we are having the same kind of a behavior. We're having a small decline or a pullback when it tested the 91 handle, and we're having also the same behavior over here. So that confirms the strength in the Aussie, and it is not a reason for us to get out of that trade. But for those who have taken the trade late, then we are going to treat that as we're going to put a precautionary exit point, and that precautionary exit point is going to be the low of the day. So if this low is the 90.12, so we do not want the Aussie to trade below the 90.12 on Sunday tonight or in the beginning of the Tokyo session, because that would indicate we might get a decline in the Aussie just in sympathy to what is happening in all the other currency pairs. If we trade above the high of the day, which is the 90.80, then we're looking to initiate a new long on our Aussie dollar. This is the chart for the Australian on the intraday, and as you see, it is a major uptrend. It is making higher highs and higher lows all the way through, and on the day when the dollar rallied, all what we had was a further decline only to test the prior structural low, and we made an attempt towards the end of the day to trade above the market side. This is our market side, and we have this, this is the market side, and we bounced off our structural low. We have bounced off it, and we have just came here to test the market side. So with that, as I said, we are not going to, in the Tokyo session, I'm going to filter out the short sells. I will only short the Aussie if it trades below the 90.12, which is the one we have identified on the daily chart. But if I have a break out of the opening range to the upside, if you want to take that initial long, you can take it. If you want to be more on the cautious side, then you take the trade above the 90.80. And the reason I'm saying that is, again, we're seeing the buying that's coming into the dollar, so we just want to make sure that we're not getting a head fake. I don't want you to take a buy and it comes back and decline and you get a head fake. I'd rather, if we leave a few pips on the table and go and take a more conservative entry on a buy above the 90.80. So if I would take the way I will be trading that, I will only be taking a buy above the 90.80, and I'm going only to take a sell on the Aussie yen, on the Aussie dollar below the 90.12. So I'm going to enter these prices on the Aussie dollar. So our long point is 90.80, and our short point is 90, and our short point is 90.12. So for the Aussie dollar, I'm going to go long. I'm going to actually step aside from the ranges right now because of the market condition. I will only take a long above 90.80, and I'm going to take the short below 90.12.